Hey guys, welcome back to another episode. Today we're going to take a quick look at Roblox. Unfortunately, not with great things. The company just reported earnings and the stock is down over almost 24%. At one point it was down over 25% for the day. So in today's episode, what I want to do is take a quick look at what happened. Why are we seeing kind of this heavy negative reaction to the stock? And then I'm just going to share my overall thoughts. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. They just reported earnings and unfortunately they missed in all metrics. And the small guidance that they gave, we're going to see they kind of are no longer doing quarterly guidance, but they kind of gave us insight for the upcoming month that might not be looking as attractive. But unfortunately, they missed in earnings per share. The loss was wider than anticipated. They missed in revenue, and more importantly, they also missed in bookings. So let's just take a quick look at earnings. I have a lot of stuff highlighted, and we're going to take a quick look at two items. First, the company did share investors letter with some information in there, and then we're going to take a quick look at the graphs. I think the graphs are more important, but I do want to say I am a shareholder of Roblox, right? I am bullish in the company. Just because I'm bullish in the company doesn't mean I can't see the other end, right? And I think every investor needs to do that. You can't be a perma bull. At the same time, you can't be a perma bear. So there are some critiques I'm definitely going to give Roblox in this earnings. At the end of the day, from what I'm seeing, we're going to see, maybe you guys can change my mind later on in the comments, but I don't mind holding Roblox right now. Maybe we can talk about buying later on though.
Let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video.
All right, so the first topic I want to talk about is how this company right now is mentioning that they are focusing on safety, right? If most of their users are minors or users under the age of 18. And that is very important, right? Because when anything has to deal with a child, there's a lot more regulations, a lot more kind of eyes on it, a lot more criticism, obviously, rightfully so, right? Because this is an age group that is still kind of developing. So Roblox, main thing they're saying, hey, we're focusing on safety, and that has always been one of our main priorities. They also mentioned 3 key objectives that they're working on. First is growing in international markets. We're going to take a quick look at the graphs that see that, hey, that is checking out right now. Second is attracting users in older age demographics, aging up. That's also happening now. We're going to see in graphs that the older demographics are now making a majority of users. And the final one is expanding their platform's breadth of use. And I also see this happening right now when a lot more companies are kind of bringing experiences into Roblox that might not be your traditional experiences that we've seen in the past. So these 3 objectives that they're doing, I believe, are in motion and are happening and growing over time. I do want to mention that, like I mentioned, there's going to be some things I don't like about earnings. First, they chose to forego quarterly guidance. This is, as an investor, obviously I believe that 1 quarter is not going to make or break a company. I still do enjoy when companies give guidance just so I can kind of keep track of how things are going. A lot of other investors kind of see this as a bearish case. Hey, they're no longer giving guidance because things are starting to look weak. To some extent, I agree, because then they say they're rather focused on long view rather than quarter-to-quarter results. And I believe the only reason this is happening is because things are looking a little grim. If we were back in 2020, 2021, when things were going at crazy levels, they would have never said stuff like this, right? They would have never said, hey, we're going to stop guidance. They would love to show those double-digit growth, those triple-digit growth. I believe as a company, you need to be transparent, both in the bad and bearish times. That's something I'm not starting to like about management. In my opinion, it looks a little sketchy. At the same time, others might have other opinions. They did mention that in the past few weeks, they've added 4 incredible companies that decided to bring their brands onto Roblox. The first is the National Football League, teams up with Roblox to expand metaverse presence with the NFL Tycoon experience. Another one we saw is Warner Music Group brings global DJ David Guetta to Roblox for a first of its kind DJ party premiere. We are seeing a lot of music events happening in this platform. The third one is McLaren is also creating an experience on Roblox. And finally, the last one I saw, and actually I'm guessing I did find all 4, is Alo Yoga has entered the metaverse through Roblox. And Alo is kind of doing it different, right? Most companies are coming here and they're trying to sell digital fashion. From this report, it says that Alo is just trying to bring awareness to wellness on a new platform. So this is why I believe Roblox could be a strong platform, because one, it could be used as an advertising platform for companies that want to sell some form of goods, or it can also be used by some form of strong following to kind of spread a message, right? To kind of spread some form of showings, and that can drive a new type of users to the platform. So obviously there is growth potential for Roblox still. The company did mention that, hey, they went from being a high growth company to being more like a step function, right? They do mention that, hey, right now user engagement growth is increasing and is being driven by international expansion and users over the age of 13 and over. Bookings for now are primarily driven in the United States and the United Kingdoms. They would mention that year-over-year booking comparisons should improve starting in the May through June timeframe. So again, this is, even though they didn't give guidance, I believe if you kind of read in between the lines, it does show that this upcoming quarter might not be the best quarter. And I believe that's what the market is kind of pricing in. Now I want to take a quick look at the overall kind of information data that they gave us. Here I want to show January 2022 key metrics. First, they do mention that daily active users are still growing, 32% year-over-year growth. I am enjoying that a lot. Users are what's important for the platform. Hours engaged have also increased 26% year-over-year compared to same time in same January of 2021. Bookings have only grown 2 to 3%, and this was where things get scary, right? Bookings have not grown as much. I know some investors might like to look at revenue. Revenue is showing strong double-digit growth, almost triple digits. But revenue, due to the way this company deals with bookings, and they do a really great job at explaining it in page 3, I believe, of their presentations of how revenue, deferred revenue, and bookings are illustrated. Bookings as a gaming company is more important than revenue. Bookings still grew 20% compared to the same time last year, and it's still up a nice amount, right? We can see this nice step jump up. I still can see how this is going to be a strong company. But one thing we can see is bookings normally, fourth quarter is the big step function, right? This is the step function that we're talking. Hey, there's the thing, then there's a step. After that step, it starts to kind of flatline for the year. So what many investors might be expecting to happen is, hey, this is the other step function that happened. And now for the rest of the year is going to be flatlined to some extent. Some other things I want to take a quick look, adjusted to EBITDA ratios, still 21% of bookings. I do believe that's pretty high, but it's nowhere near where it was previously in late 2020, early 2021. Net cash provided by operating activities is also still up, right? This is positive. This is a company that makes a lot of cash from operations. Unfortunately, it is decreasing compared to previous quarters. So there is a decreasement, even though things are still looking positive. Free cash flow, same thing, still positive, but decreasing. So seeing all these stuff kind of metrics decrease little by little, or some of this free cash flow took a huge hit, we can see things like this really drive that stock price down. At the end of the day, daily active users are still increasing, grew 33% compared to the same time last year. It's still in a nice uptrend. Daily active users by region and age are still increasing. We can see it's mainly driven by the Europe and APAC region. Unfortunately, United States is down year over year, and it's also down big quarter over quarter. So this is something that might be affecting investors, especially, hey, fourth quarter is supposed to be during the holiday season. Most kids are supposed to be off. So what's happening here in the United States? So that's bringing a lot of uncertainty there. But by age group, we are seeing an increase in both the under and over 13 age group. Now the 13 and over make up majority. This is the second quarter where they make up majority of daily active users. Hours engaged, like we took a quick look, is up year over year over 28%. Unfortunately, it is down a bit compared to quarter over quarter. All right, so let's go back to Roblox. First, I do want to say this 24.5%, in my opinion, is an overreaction. I obviously believe Roblox is no longer the growth company that it seemed in 2020. At the same time, I don't think Roblox is going anywhere. Obviously, it's only been public for a year and a half, I believe, but this is a platform that has been here numerous years. So it's not a place that's going anywhere. It's continued to grow its daily active users. People are getting older and still playing their platform. And more importantly, strong companies are coming to build experiences here. So I don't mind holding, if I had a big position at these levels, I don't. It's always important to make sure never to overextend yourself in one company. If one feels they are overextended, even with the price decrease, I normally wouldn't dollar cost average. At the moment, this is a company I've been building over time. It hasn't reached my full position side. So in the upcoming days, this is one I don't mind dollar cost averaging into. It's all about how much one has invested. Has it reached full position size yet, or is it still early on in the game to kind of dollar cost average down? So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.